Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance, and no cap on existing investment portfolio size. Plus, personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, hey gang, Phil Tarrant, host of the Smart Property Investment Show. Hope you're well. Hope your engines are firing on all cylinders as you try and capitalise on what is a mad property market right now. Now, I get it all the time. You've probably been tuning in. We do the Smart Property Investment Portfolio Property Update, where we look at our own portfolio. And it's one of the sort of pillars of Smart Property Investment is that we sort of, when we kicked this thing off about a decade ago, we saw there was so much BS out in the market of everyone becoming a bazillionaire overnight in property that we went, okay, well, let's go and build our own portfolio and show you how we will do it and all the mistakes that we make, and hopefully you can learn from that. So that's a big thrust for us right now. You would have heard that I was up on the central coast of New South Wales, a place called Berkeley Vale, last podcast for portfolio update, put a new roof on a place, which I didn't really want to do, but I had to do. We sort of got into that. But one of the key things is that people keep asking me how I go about managing our portfolio. And I went, well, I use this super duper spreadsheet that we created. That seems to be the hottest thing in town. Everyone wants to know it, see it, feel it. And I have on good account from buyer's agents and also my accountant who have used this to help me steer my portfolio, that it's pretty good. Doesn't do everything. But if you don't have anything to help map how your portfolio is tracking, I'm happy to share mine with you. It's just an Excel spreadsheet, but the team have made it now available so you can download at smartpropertyinvestment.com.au. You can just go and click on the link, get that. There's a couple of example properties in there, and you can just fill it in and use it as you want. So go and check it out, smartpropertyinvestment.com.au, and you can get that now. There's lots going on right now, and interesting, there's a whole bunch of sort of philosophies or doctrine that you can use when you are investing in property. Some people have a very defensive strategy where they play it safe and very considered in decision makings and don't necessarily get on the front foot and go hard, whereas there's a lot of other property investors out there who are pretty aggressive and they're not scared. They're not going to sit around idly, and they'll go out there and they'll be very decisive and proactive. And they play a very offensive strategy when it comes to property investment. So depending on where you are and the maturity of your portfolio will probably depend how you're going to play the game. Those people who are new to property investing probably should be pretty proactive and be offensive, whereas those who have been at it for some time, maybe when they're paying down their portfolio or thinking about retirement, will probably play defensive. For those that sort of sit somewhere in the middle, people like myself who have been at this for 10 years or so, I'll play a game which is both defensive and offensive. So I'll make sure I protect the crown jewels, but I'll be out there looking for smart strategic investments moving forward. So I really want to have a chat about that today. I've invited into the studio Sam Gordon. He's Director of Australian Property Scout, who I think subscribes to the aggressive property investor. Probably because he's a young bloke. Sam, how you going?
Good, thanks, Phil. How you doing, mate?
All right, mate. What's been going on? I haven't seen you for last time we spoke. You were locked up in isolation in the middle of COVID down on the south coast somewhere, surfing all day.
I was, mate. Yeah, I was down there. That was good, mate. It was a good little break.
Yeah.
Still working hard at it, just from a bit of a distance, mate, in lockdown. But no, it was good, man. It was good.
Yeah. So, how do you feel about property at the moment? How's business? All right.
Business is good. Yeah. It's very good, mate. It's a good time to be out there in the market. I think there's a few markets that are really at the start of their upcycle, places that have seen over decade-long kind of lows and flat lines where they haven't been doing anything, and they're finally shaping up to some pretty good boom markets. So, yeah, mate, business is good, getting really aggressive in those markets, making a lot of connections and taking advantage of it.
So we'll have a chat today around sort of a more offensive strategy when it comes to property investment rather than defensive. And you need to play both simultaneously, but one can outweigh the other. Now, you're looking in pretty good nick, mate. You've been looking after yourself.
Thanks,
What's
mate.
going on?
Yeah. I train every day, man. I love it.
What sort of training do you do?
I do a bit of everything. So, I used to play soccer at a pretty decent level. Yeah. So I still do a fair bit of running. Don't kick the ball around anymore, but I still do a fair bit of running. But I probably train weights. I think it's about 4 or 5 days a week. It's at least 4, if not 5 days a week, as well as the runs as well.
Why? You just enjoy it?
I love it. Yeah, I love being fit, being strong.
Does it help you sort of be more alert and give you sort of arm you with some capabilities to do your job good?
Yeah, definitely. Yeah. No, it makes me sharp. So I get up early every day and train every day, every morning. And if I don't, it's funny, the days that I don't, for whatever reason, I make an excuse and I don't, I always feel stodgy. So then, it gives me a good kick up the arse.
Yeah, it's really funny. Like, I disappointed myself yesterday because I didn't do anything at the lunchtime because I had to do something else. So I was going to go to the gym and I'm a swimmer, right?
Yeah.
At night, but something happened at work, which means I couldn't do it. And I felt really bad about it. And I wish, even today, I just feel a bit crap. Yeah. Went home, had a couple of wines. So I did everything which I shouldn't have done.
Exact opposite.
But it's funny because you got to be in, I reckon you got to be in pretty good condition, both sort of mentally and physically, to be able to do anything well, particularly if it's business or investing in property. Because if you're not sharp, you don't see the world the right way. And if you want to apply an offensive strategy in going out and buying property, you got to make sure you've got everything singing along. So anyway, so that's didn't mean to go there. So I've got a thing here, and it's not very often the team give me a bit of a sort of a background to the chat, and I like it because we're going to do a lot more of it moving forward. But it says Sam's been a rhino stampeding through the Australian property market. We get the grip with what Sam's been doing with his portfolio. What's a rhino stampeding for the Australian
I'm surprised reading that as well, mate. I don't get called a rhino too often.
I know. Are you happy with that? A rhino stampeding?
I'll take it. I mean, I am pretty aggressive with the way I invest. So I guess that's probably where it's come from. I think, mate, since you and I spoke last, I had a bit of a break because I was doing a small development. Yeah. And then when I wrapped that up at the back end of last year, that's when the market was really going through that change. So all the stock had dried up. A lot of people were entering the market and there was a bit of a window there, and I went pretty aggressive and kind of snagged myself another 6 properties during that sort of time frame. So
Australian Property Scout, so you're a buyer's agent.
Yeah.
So let's pick through sort of how you see in the world and what you're doing in a moment, but let's chat about you as a property investor first. So I'm trying to remember the last time we got together. I remember where you are. I remember looking where you were. It looked like you were in some old shack on the Central Coast, which looked cool, by the way. Whereabouts is that?
South Coast. I was down near Sussex.
Okay, Sussex. Yeah, nice part of the world.
It is, mate.
How's property markets doing down there?
Mate, everywhere. Like the rings of Sydney and, those lifestyle locations there are absolutely on fire.
It's going nuts.
Because I live in Wollongong, mate. Wollongong's ballistic at the moment. It's crazy.
Yeah. I got a place on, I was only chatting with my buyer's agent the other day, in Port Kembla. Along pretty much, Port Kembla quite well? Yeah. You know where the beach is, and there's that huge sort of park lagoon area.
Oval in the middle,
it's one of those, it's on the street that faces out over the water.
Yeah, right.
And we're trying to work out the valuation of it, and we're just going, it's just mad at the moment. It's hard to work it out.
Yeah.
Just too hard to work out.
Yeah.
We're thinking about developing the thing, knocking. It's got 2-bedroom sort of old
villa sort of
crappy townhouses on it, which you can live in them, but I wouldn't say they're not the Ritz, right? So we're thinking about doing, but so that whole Illawarra, because that's sort of where sort of south of Wollongong, and you start getting into sort of Shoalhaven and all that sort of stuff. Yeah, it's a pretty good spot down there.
It is, mate. Yeah. Certainly picked up a lot down there. I wouldn't be personally, I wouldn't be trying to buy or invest down there at the moment. It's a very pricey point, and it's a pretty hot market to be trying to compete in. Yeah, but it's a good part of the world. It's nice to live down there.
That whole Port Kembla, I'll talk about Port Kembla a bit, but like if you go south of Port Kembla on the same beach, it gets beautiful, right? Like Port Kembla's got a bit of a stigma of being a really industrial town, right? It's where the old, well, it's not old really, the steelworks are. They knocked down that big stack ages ago, which sort of helped fix things up. I reckon that Port Kembla area, that it's supposed to be one of the nicest beaches in New South Wales.
Yeah, I think it won like the best beach in either New South Wales or Australia once. I remember years ago.
It's a beautiful place.
It is a good spot.
You just go sort of 2 kilometres from it into the main drag of Port Kembla, which is cool, by the way. But I reckon places like Port Kembla will become hugely gentrified over the years and be big holiday hotspots, right?
Yeah, it used to be heaps like a very, very strong housing commission down there, Warrawong, kind of all that area down there. Yeah. A lot of that's been sold off, and a lot of first home buyers, they move out of like Wollongong on the northern suburbs, which is where I live, and they move down south because they can buy quite cheap.
Pricey, right?
And renovate down that way. So
that sort of road from up through like Thirroul and Austinmere and the Headland Hotel, a great place. Spot. So that's berserk now, right? You can't get in there. What's the waterfront along there cost you these days?
At least 3.
Coaldale,
at least 3, if not more, depending on the house and finish. Okay. Big money.
Yeah, big money. Anyway, Rhino stampeding through Australian property market. So last time we spoke, you're in your beach shack somewhere. What have you been doing since then? You were finishing off a development. Where was that?
That was down Southern Highlands. So I was knocking a little, dual lockdown down there. Finished that off. Did quite well out of that one.
Southern Highlands, like Barrel, Mittagong type way?
Yeah.
In Barrel?
Yeah, because I grew up down there.
Oh, did you?
Yeah, so I've done quite a fair few down that way as well. Yeah, did really well out of that. We kind of bought in. There was a few of us we bought in. We got land really cheap at the back end of 2019.
In Barrel?
Mossvale. So one side south. Yeah. And because I lived down there for a bit and I've done a few buy and builds down there. We were buying land in the mid 200s and now the same blocks right now would be over 400 grand. Like in 2 years, it was ridiculous.
So what'd you put on it? Houses or duplexes?
Yeah, I just built like a dual key under the same roof on that one because I always love my cash flow. And it was a good little build down there just to kind of pick that up. And
so what, like a 4-bedroom house and a 1-bedroom?
Yeah, a little like 2x1 kind of granny kind of built into it as well. So it was a good little.
So the same house, it's just an adjoining wall, right? Yeah. It's a fair bit of work you got to do on the fire stuff in between the adjoining walls.
You can get them speccied up, but like a lot of specky builders build them these days as well for a pretty good price. So a lot of the time, man, if I'm picking up land, I just build a good cheap specky, $1,000 a square metre on it. Yeah. And you can upgrade for pretty cheap and get pretty good finishes put on them and make good margins, man. Yeah, we got a really good val off the back once I finished it.
Was it in an established area or was it?
Yeah.
Okay. So you bought a place or was it empty block? Would you knock something down?
Yeah, we bought land. We bought about, there was a release kind of coming out and I think there was about 12 in the release and we bought like with other guys in the business, like other investors, clients, and we bought 6 of them in total. Okay. So it was good. Yeah, we got a good discount on them.
Did you keep the place?
Yeah, I kept it. Yeah. So I'm very much a buy and hold.
Yeah, that's cool. So how much you pay for the land?
What was mine? I think mine was $270. Mine was $270.
And what you, $1,000 a square metre on the bill? So
I built for about I think all up was about $320, $330 on that.
So you're in for just south of 6. Yeah. Okay. What sort of value you reckon you get on it there?
Right now, if I try to take it to market, it'd be up near $1 million, I reckon, 900 to $1 million. Yeah, probably when I did it. When I did it, it would have been about 8. Yeah, but the market's just gone nuts. Vacancy dropped from about 2.5% to 0.2%. Like we're pulling, you're pulling 600, 650 on a house, and then your grannies are. I've got other ones in the areas as well, renting through the roof as well, but. Yeah, they're pretty. It's almost impossible to get the land now for decent money, and that's the thing. That's the difference. So it was just fortuitous timing. I knew I was going to make a margin on it, but I didn't think it was going to be that much.
Well, the thing is that if you go into it being conservative in what you think the net result is, and then you're fortunate that you get the value uplift of a hot market one. So that whole sort of Mossvale, Mittagong, Barrel. I was down there for a wedding recently, so I was skulking around. Ebenezer, not Ebenezer. What's the place is called? Bundanoon,
Exeter. You think Exeter? Yeah. That's
Exeter,
a good spot,
Bundanoon.
man.
I was like, I like it down here.
Yeah.
I've got some numbers up here now on smartpropertyinvestment.com that are around Mossvale. Mate, this place is going nuts.
14% growth in the last bloody 12 months. I reckon it's more than that as well.
Yeah, well, these numbers lag, right?
Yeah,
they're probably, 14%, median quarterly growth, 4.2%. Median 5 years has gone up. What's that? Is that 60 or 80? 60.22%. Yeah. So it's not bad. So that whole area, what's driving sort of value uplift there, you reckon? Sydney siders?
Yeah, it had a massive boom with the rest of Sydney back through the mid-20 teens, and then it had a nice big plateau and did next to nothing. Yeah. But since COVID, the big, the shift to affordable, good lifestyle locations within proximity to the cities. Yeah. It's the same as all the rings, man, like your Central Coast ones, South Coast, the Highlands, outside Penrith sort of way up the Blue Mountains, all those sort of ring locations within, an hour to 2 hours kind of back in, they've just gone ballistic.
So you've bought some stuff since you finished this development?
Yeah.
You've been going nuts. All right,
I'm pretty aggressive.
All right, let's get into this. This is the rhino stampeding through Australian property market. How old are you again?
31.
Okay, you're 30 now, so
I'm an old bastard.
Got to grow up now. You're not that young anymore, but okay, let's get into that. We'll go to a break beforehand. Stay with us, back in a moment.
Whether you're a seasoned property investor or about to buy your first property, finding the right investment property to buy in 2021 isn't easy. Why do it alone when you could partner with award-winning buyer's agent Paul Glossop? Over the last 10 years, Paul has helped hundreds of clients build multi-property portfolios. Paul's secret is finding off-market bargains that get snapped up before the general public even gets a sniff. Interested? Head to purepropertyinvestment.com today to schedule a strategy call with Paul Glossop.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show. I'm with Sam Gordon. We're chatting through his portfolio, uplift, growth. So he's finished off, I guess, a development. You've built a house, so you develop it. Most people think developing, you're building 10 of them. Like you can be a developer just building one thing, but 2 properties, which is cool. This dual key. And just on the dual key stuff, I want to have a chat about that because up in Brizzy, if you go at like Ipswich or some of these other areas, Toowoomba way, sort of, every man and his dog's building these dual key stuff and they're selling it and going, yeah, it's dual key. Like, you must like it because you've done it, but if every house is a dual key house, it completely changes the fabric of a suburb. So when should you dual key it up and when shouldn't you do that?
Yeah, so like with this one, this is more of like kind of an owner-occupied location. So your places you're talking about, like a Toowoomba and Ipswich and that, they're generally in estates where a developer or a project marketer will sell, an entire estate off the plan as these great SMSF purchases. Yeah. People pay $600. By the time they're valuing them up for completion, they're $450, $500 because it's an estate full of them. I pretty much only do them in established areas where you might be in a state of, or whatever it is, or a local, council area, and there's not that many of them around, and it's just the target market's right for it. There's, very, very low vacancy. It's got to be the right market to do it within, not somewhere that's already flooded with it. If it's flooded with it, no, I don't even go near it. No.
So established rather than new build, because there's a lot of really good marketing material from project marketers around these new build estates. So, in time, they're probably going to do all right. But if everyone's got the same thing, it's hard to actually have a point of difference. So just make sure you do your numbers.
You can't make a margin on them either. So if you're buying that way, like with ours, the only reason I did them again, because I've done a few similar to it, but the only reason I did it again was because we bought the land at such a significant discount. Yeah. If you're buying them direct from a project marketer or a developer, you're not making a discount.
So with a project marketer or developer, it means that you're buying a house and land package. So pretty much it's kit. So you just bought the land down in this place in Mossvale. So you bought 6 of them. So you aggregated the purchase. You got a discount of something. But it wasn't incumbent to the fact that you needed to use a particular builder to build a property on it. Right. It was you just bought the land and went.
Yeah, we went off and built ourselves.
So who owned the land? Did someone own it and they split it up themselves? Did a DA and split it? Did you buy directly from them or they use a project marketer?
No, we went through the agent. So there's an agent down there that I bought a lot of stuff from. Yeah. I think I bought the first thing from them 8 or 9 years ago and I got pretty deep connections with them. Bought a fair bit from them before. Yeah, I pretty much just told them I was back on the hunt for some stuff. They let me know when some decent stuff was coming back through. And it's always the same way. I always pick them up when a developer's looking to sell off a certain portion of it and I can take a decent amount of it out and they get all their pre-sales they need to actually do the development. Okay. And then they can take the others to market. And
so you can really help them sort of value up something and whatever they need to do the DA and justify the feasibility. So they go, it's got to happen no matter what. Pre-purchase, but you're going to be the mayor of Mossvale one day.
Maybe.
Yeah. So you actually grew up in Mossvale?
No, I grew up on a farm. Do you know Bargo? Like half an hour south? Yeah, so next to Bargo is a little suburb called Yandera, even smaller. There's about 500 people there.
Not as glamorous as Bowral, right? Bargo.
Nowhere near, mate. Nowhere near it.
What sort of farm? What are they doing?
We've had this conversation before. The bloody rabbit farm.
That's right.
I grew up on that.
A rabbit farm. Still chasing rabbits.
Still
stampeding. So what's happened since then? What have you bought? Tell me about it.
So in that kind of transition at the back end of last year where the market was really going through a pretty big shift and I could see it was going in a big way, mate, I went pretty aggressive. I picked up 6 properties kind of during about a 2 or 3 month kind of window. Okay. I like to do them all at once because I got a lot of property already. It takes a while to kind of get all my loan docs together and all my all the rental stuff. So I like to smash them all out in one hit. So I pretty much just got everything lined up and then went out and kind of aggressively picked up. Yeah, it was 6 properties over. I think it was a 3 month window.
So how many properties in your portfolio now?
26 now.
Okay. You're not messing around. Okay. What sort of valuation you got, you reckon, of the 26 properties? What do you reckon it's worth?
I'm just shy of 10.
Okay.
So I'm up in the mid 9s at the moment.
Wow. Okay. And what sort of debt?
5.5.
You got 5.5?
Yeah.
You're doing all right?
Not too bad.
You happy with that?
Yeah. I've got like a few of these kind of what I call like a manufactured cash flow deal. Yeah. Once I finished a few of those deals off, it's in the low 200s a year passive as well. So that was a big thing I kind of wanted to make sure I was building with this set of kind of purchases that I was doing. So it's good to have kind of knocked all that out.
So when you rock up the pub on a Saturday and does everyone go, Sam's paying?
No, mate, no one even knows what I got. No, none of my mates really know. Like they know obviously what I do and what I'm doing, but
they don't know that.
No. I don't tell like friends, family, none of them really know what I do. They don't
even
listen
know
to the podcast. My family doesn't even listen to this stuff. They don't even know.
Wow, keep it quiet. Yeah, you end up with a lot more friends, right?
That's it.
But it goes to show you're still relatively young, right? And you're being able to manufacture that. Because what was your first job? Remind me.
I was on the farm. So we transitioned away from, I was kind of doing a bit of both. I was scaffolding.
That's right. You were scaffolding.
And I was working on the farm because we don't, like the old boy doesn't farm rabbits anymore. We're producing the feed for him. And for stock feed and stuff. So I worked that the whole way through till I had enough coming in from the portfolio that I could leave and start this.
Does he know? Does he know what you're doing?
Yeah,
He does.
Yeah, he knows.
What's he just go?
Yeah, he's a bit blown away by it all. But
It's pretty cool.
it was pretty funny when I remember when I won the award, because I won the Investor of the Year award. That was at the start of last year, I think it was.
Yeah.
And he didn't believe me when I told him. He goes, "No, you didn't. Like, you full thought I was pulling it on him." I'm like, "Mate, I did." And it was.
What sort of car are you driving around these days?
I got the Wild Track, mate. The Ranger. I upgraded from the
car.
Tri. Yeah, no, she's good.
You didn't get you didn't get the Raptor though.
No, I didn't get the Raptor.
2-litre fancy machine engine there. You got the Wild Track. Much better car.
No, it's
Specced
nice,
out
man.
the whole kit and caboodle.
Not yet, man. Not yet.
Yeah.
No, it's nice. It's good. She goes cruising around. Yeah, I like
Gets
it.
you around. All right. So you bought 6 properties. Just bang through it. Quickly bang through them for me. Like, what were they? Where were they?
So they were kind of spread. I had a spread between Brizzy and Perth. I've been diversifying a bit over there as well. I'm not going to talk too much about locations, man, because we're still pretty aggressive in there at the moment. So I'm keeping that stuff under wraps like normal.
Fine. Did you
Sorry,
buy
mate.
houses or units?
Houses, always houses.
All right. And what sort of price point were you buying at?
A range between about 350 to about 550 was the solid range there.
All right, 350 to 550. And this is in Perth.
And Brizzy, yeah, we
Brizzy.
did a fair few in Brizzy.
All right. So you're just buying the same stuff you're getting for your clients,
Yeah,
really?
just getting below market value, and some of them future development as well, and kind of different stuff like that.
Okay. And all of them sort of generated pretty good rent?
Yeah.
Yeah.
It's always got to be a precursor of what I buy.
Yeah.
For clients or myself, we've always got to have the good rents coming in and the value addability of either being able to boost rents and values as well, which is the big one. Because if you can recycle a majority of the capital back out of most of the deals as well, that allows you to continue moving forward. It's one of the big things I'm a big fan of. And mate, kind of since the start of COVID, we've had a lot of like young fellas, come to with 50, 60 grand. Well, they were ballsy enough to buy during COVID, and we've turned that into 2-3 properties easy.
And they're doing
Heaps
well
of them,
now.
Heaps of them, yeah.
They just think you're the sort of the rainmaker, right?
Yeah, I think you're a god. It's mad. No, it's awesome because like you see these young fellas, like they're very similar to what I was in my mid-20s, and they come to you and they trust you, and you turn one deposit into 2 or 3 properties in less than a year, and they're pulling this because it's when they do the vals, right? They hear about it all and they're like, they're like, that's pretty decent to be able to do that. And then when they get the bank val, it's not until they get the bank val 3 months or 4 months post settlement, and they're like, whoa, this is actually real, and they can cash it out.
So they call you up going, I just got this, like, you get these phone calls, I just got this val and I'm rich.
Yeah, seriously. And they're like, let's go again. So I'm like, yeah, mate, let's do it.
But it can't always go forever, or can it? If you build a good foundational portfolio, you've got 26 properties. Is that enough? Like,
No,
you're going to keep going?
Yeah.
Are these properties you got a lot of headaches in your portfolio, or is it all pretty?
No, the one thing that I really learnt early, and I'm thankful I did it, was I stick to core areas. So I stick to they're probably spread between 5 or 6 areas, which means
Which you're not going to tell me about.
No, I've already told you some of them before, mate. No. So what I do is I try and keep the spread quite close, which means I only need 5 or 6 property managers.
Yeah,
and if you have 5 or 6 property managers, they know what to call you about, what not to call you about. I get that question all the time. People are like, man, don't you get calls like nonstop? I'm like, no, I might get like 1 call a week, 1-2 calls a week max.
Yeah.
And half the time it's just a release, just kind of checking on this or that. And it's not as big a headache as you think. And it's, having really good property managers is the key to having a good portfolio that doesn't give you headaches. Because you have a good property manager, for one, they're going to put the right people in.
Yeah.
They're not just going to try and throw someone in there because that's going to cause more headaches. And they're going to know what is and isn't something to bring to your attention. And it's worked out well.
Tell me about your sort of mortgage setup. How, are you sort of with a handful of lenders, or how do you structure it?
Yeah, handful of lenders. Like at the very start, I think I did my first 7 or 8 or something with CBA. And then when I maxed out with them, it was kind of 3 or 4 here and there with everyone else. So, yeah, man, I'm very open book when it comes to like when I change around lenders. I'm definitely not tied to anyone. Yeah. But I'm always only buying with 80% lenders these days. So when I first started out, I was all 90s. I think until I got to about number 7, and I had enough enough equity in the portfolio. I was able to just refi a heap out, and I was just buying everything at 80 after that. And then you buy well, you can rip it back out and keep building it like that.
Interest only or P&I?
It's a mix.
Yeah.
So my really strong cash flow deals, I keep them on P&I
Yep.
because there's so much surplus cash flow anyway. It doesn't hurt it that much to have them on P&I. And over time, like they're the properties I want to hold forever. So I keep those ones on P&I. All my like bread and butter sort of style deals that are purely in the portfolio, I've bought them really well. They're in the portfolio to have a very good, strong growth cycle. And when they have their good, strong growth cycle, I'll probably look to try and sell them at the peak and then use that profits to pay down debt. Yeah. And I keep them on interest only because I have no real reason to reduce debt on them at this point.
And you're fixing, or you keep them variable?
Again, it's a mix.
A mix.
Yeah.
Yeah.
There's a big mix across the portfolio.
You use a mortgage broker to get your
Yes,
stuff?
yeah, I do.
Same person you've always used?
No, I think I'm on to my 7th broker.
Oh, are you?
So yeah, kind of happy to change that as much as I was happy to change the banks. It's more, you end up maxing out with certain people.
Yeah.
So you get to certain people that they get you to a certain cap, either that they're comfortable with or that their skill level gets them to and gets you to. And then you got to move on. That's just part of it.
Yeah, and when you're getting finance for properties, you know, I've got the same problem and I dread it because it's a nightmare, right? But you got to provide rental statements and you got to provide loan statements for every single property.
Yeah.
You know, they're asking questions down when interest only expiry periods are, or it's an absolute nightmare.
Yeah, it
right?
is.
It's an absolute nightmare.
Yeah.
So you got to find a good broker to make sure they can steer you through that,
Yeah,
because a lot of
definitely.
them just go, this is too hard.
Yeah.
You know, like it's way too hard.
Yeah,
but
it's too much there.
you know, did you refinance anything else when you went through that process?
What went through the process of buying
the
the stuff?
6? Yeah.
No, I didn't at that point. There was nothing I really needed to refi too much, because a lot of the time when I do a deal and I've finished it, say if I renovate it or if I'm strata titling and renovating, normally when I've executed the deal, I'll then go back and refi it at that point. Okay. I kind of do it when it's fresh and when everything's looking brand new. I refi it at that point, pull it, and then I just leave it.
Yeah.
And a lot of time that's when, you know, like you're saying before about you fixing your rates, that's where a lot of the time where I'll just fix some rates at that point and leave it alone for a couple of years.
So how are you going sort of, when you get a pay slip, it's a lot easier to get a home loan, but when you become a business owner, it's, you know, you're self-employed, it becomes a little bit more complicated. How are you going with that? So you got a number of years of company financials now that the banks are happy to lend.
Yeah, pretty much.
Yeah.
Yeah, it's fine. As long as, mate, you go 80% lends, you show your net equity position of a portfolio and you show your passive. I think the big thing is when you've built a portfolio that's so strong in passive income, they look a lot more favorably on that than people who might go blue chip and getting 1 or 2% yields. Whereas my portfolio as an average is probably over 8, over 8 or 9%. So like there's a very big difference, I think, when you're playing in that field and when your cash flow is so strong.
Yeah. Good, mate. So what's next? So you're going to just hold fire for a while, or you ready to go?
I don't know, man. No, I'm going to leave it for a little bit. So I've got these deals I've got to execute. Once these are fully executed and they're all finished off, I'll probably go again.
So you've exchanged on these, you haven't settled? Or
I've settled on all of them.
Settled
They're all
all
done.
of them. Okay.
Yeah, they're all done.
Wow.
But yeah, there's some big renovations kind of going through with some of them. A couple of them being converted into a few different things.
Okay.
So yeah, it should be good, man.
How do you find the time to do that and also do your day job?
Well, a lot of the time they're running with clients' deals as well.
Okay.
So it's a bit easier when you kind of, you got a couple of crews working on a few different things and you kind of, it's pretty much you're working on 3 or 4 different projects at once. It's not that hard when yours is kind of lumped in with the mix of it.
Okay, that's cool. Well, let's have a chat about the stuff you're doing with your clients. We'll just go to another break. Stay with us. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant from the Smart Property Investment Show with Sam Gordon, Director, Australian Property Scout. Just chatting through his portfolio, and he's one of those guys who is a buyer's agent and he provides the services of being a buyer's agent based on his own experience, and he seems to be doing pretty well in my very unlearned opinion. But 26 properties, 10 mil evaluation, 5.5 million in debt, so near $5 million in equity. Do you feel like a millionaire?
No,
do you wake up every day and sit there like Scrooge McDuck and count your coins?
No, definitely not. No, my missus laughs because I'm the biggest tight ass, man. Not with spending on different things, but I'll never spend money on myself. I'm such a tight ass with it.
There's nothing wrong with that, mate.
Yeah, I love it, man.
Yeah, you got to keep it tight. But
we laugh about it.
So when's the big day? You not engaged yet? Married? I'm going to put you on the spot here. No. When's that going to?
I don't know, man. I got the plans. We've still got to travel. We've still got to buy more property.
Can't travel, mate. Can't travel.
You still travel the country, man.
Be the best investment you ever make, Sam. It's my best investment ever, mate. Was getting married, but anyway, I digress. Now, where you're buying, you said Perth and Brizzy personally. Yep. Is that where you're operating also?
Yeah.
With Australian Property Scout?
Still doing a bit in Adelaide. So I'm pretty aggressive with what I built myself in Adelaide. So I've got 11 properties down there. So I'm pretty bullish on it. We're seeing some very good growth down there. Vacancies are absolutely through the floor as well. So there's still some good opportunities. Still doing a bit of buying down there. And regional New South Wales.
Hang on, before you go anywhere, where in Adelaide? Give me something.
North and south.
God.
There's a lot of good locations across the price points.
You're down along the beaches through the sort of Onkaparinga and all that. Yeah.
I like the coast. I think the coast is one thing that's always a big driver. Like there's always people there. They're always kind of relocating on that side. But honestly, man, the whole Adelaide's going through a boom at the moment. It's a funny one. It always flies under the radar, and it has for so long.
Because it doesn't have these huge peaks and troughs. Like you never hear property in Adelaide has gone up by 10% or 8% of the quarter. You never hear property in Adelaide has gone down 10% of the quarter, right? It's just a steady, stable performer.
But you have a look at what happened like last year during like the whole of the year, right? The weirdest thing ever was seeing Darwin top the market as highest for growth, but then Adelaide was second. You know, they still, no one really brought it up or talked about it, and yet they were second. And I'll tell you, man, it's the start of a very long boom, I reckon, an overdue boom on down there. So
in Adelaide, that's pretty cool. What about you said regional New South Wales?
Yeah.
Before I cut you off,
Where? There's a lot. There's a big place, man.
Come on,
it's a big place.
Okay, well, give me some sense for what size of satellite sort of regional city are you investing in?
I like kind of 50,000 plus.
Okay, which would be a place like what, to give some sense? Armidale?
Where do you guys? Central Coast?
Orange?
Yeah, all that sort of stuff, man. Yeah. There's heaps. Like, because regional New South Wales, it's an interesting place because there are so many big satellite cities in there, kind of ranging from that 40 to 60,000 sort of population.
Yeah, that's it. That's all you're giving us.
Well, look along the Inland Rail Link, man. There's a lot of cities, a lot of towns along that.
Inland Rail Link. North. Is that what you're talking about? So
hey, the Inland Rail Link is from south to north. It's the whole bloody thing. It's the whole state.
Okay. So if I'm going north, so is that the rail link that takes me to Brisbane?
Out to a Toowoomba, Brisbane
Inland
way.
way.
Yeah.
Okay. Yeah. So Tamworth.
Yeah, man. There's
Armidale.
plenty. Honestly, man, there's plenty out there. Yeah.
Okay. That's it. Oh, well. Supposed to be getting good quality information on the Smart Property Investment Show, but not today, it would seem.
Cryptic.
Where else do you like?
Cryptic. Man, I like Brisbane. Brisbane and Perth are both in a very similar boom right now.
Okay.
Owner-occupied driven.
Yeah.
Investors are such a minority in the market, it's not funny, which is making for a very interesting time to try and buy, because when things go to market, literally in good areas at a good price point, we're literally seeing, you could see 6 to 8 offers within a 24 to 48 hour window. Yeah. They're always over ask as well. So it's a very, very interesting market to be kind of tracking and being in. And that's both those markets. So they have been, I wouldn't say dominated, but a huge percentage of both, of Brisbane especially, but a lot of the market that was left in Perth as well, were a lot of people back from around that mining boom sort of period of the mid 2010s. And they're all finally kind of selling out, and it's all those owner occupiers getting to the market. You know, the first home buyers driving it massively in both of those locations. And it's a very interesting transition. The off markets are so bloody, you're about to ask for locations.
Right? Well, the thing is that, okay, if you're not going to talk locations, I get that, that's fine.
Thank you.
But what represents good value? Like, give me some of there, like what sort of stuff, say houses, not units.
Yeah. I always like houses,
but what represents good value? How do you know? Because depending on the market cycle, most investors will be chasing under market value properties. Well, I don't know if they exist today, right? Like, you've probably got to pay what something's worth. Yes, because if you don't, someone else will. Yeah. But
it depends on the situation.
What represents good value?
I'll stop you there for one sec, though, because it depends on the situation. Because that's such an overlooked thing that so many people love to tout. Is it like in a hot market, or if you're buying into a good location, you have to pay market value for a good investment? I don't agree with it.
Okay.
It's always about the way you buy the property, right? So there's different things in the current market that allow you to buy things for good value. One of the biggest things is buying off market. So when you're off market, what things sold for, say 2 or 3 months ago, which is no longer relevant because prices have moved in that time frame. Off market, the sellers a lot of the time, that's all they can see, what sold 2 or 3 months ago. So that's what they're looking at for comparable sales data. When it doesn't hit the market and it's not being smashed with six to 8 offers, multiple offers in that sort of window, and all that hype's there, that's where you can't get below market value. When things hit the market and you go into multiple offer. But when you're off market and you're taking the heat out of the transaction, it's a very, very different conversation. It's a very different story of what you're able to buy things for.
Yeah, fair. Look, I think that's a very, very considered way to view it. But then comes the advantages of being a buyer's agent, as in you got the ear of the real estate agent, right?
Yeah, definitely.
Like your typical property investor who's just doing this once every 3 or 4 years. Yeah. It's hard to make those relationships with agents. Call up an agent and say, "Hey, trust me. Tell me all of your anything that comes up before you take it to market. Give me a call." They just go get stuff.
Yeah.
They're going to call you or someone else who they know is probably buying multiple stuff, right?
Yeah, definitely.
So, what's your relationships like with agents at the moment? Is
Fantastic. Yeah, they're really good. Because one of the other things, again, when you've got a lot of first home buyers in a market, they love to make a silly offer on things or try and take something out, and they may not have even, the finance or anything in place. So a lot of the time, for the sake of say 20 grand or 30 grand or something like that, to take it to market and try and get 20 to 30 grand extra on market, but then have the stuff around of it, maybe being a first home buyer who doesn't even have everything in place, all those different sort of things. In the current market, there's certain properties they know they're going to be able to sell really well. And then there's certain properties that they know, especially things that are really, 100% is a first time buyer sort of product. They're thinking, if I can do this quick and easy off market, and if the owner is pliable for it and willing to kind of work with it in that sense, have a quick, easy deal, that's where that's where the sort of the opportunities are.
Okay. So you give me something which is okay.
I think so.
Off market. No locations though. This is what people want. They want locations.
I'm giving you locations in
somewhere in Australia.
Yeah, pretty
big
much.
place, right? But I get it. No, it's I guess that's the IP, right? Like you spend a lot of time working out what represents value and what represents growth areas.
Yeah. It would be a disservice to my guys if I was kind of saying where I was and all of a sudden kind of getting flooded with all your bloody listeners, mate.
You don't need to justify it, mate. I get it. You're running the business, but so you're chasing capital growth locations, though, aren't you?
Yeah,
largely.
Yeah.
So there's still a lot of growth. Is everywhere going to grow, or is it just? Are you now starting to see a 2-speed growth market where there's those which will continue to push forward, but there's already those which are starting to plateau?
Yeah, I think it's a mix. So you got your locations like your Sydney and your Melbourne, and places in there will probably continue to grow. But you got to remember, over the averages and over, like you look at the cycles, the way the markets move, both of those markets are right at the top of their cycles as it is. In terms of affordability, they're so far already through the roof. Whereas if you look at other locations that are right at the bottom, they haven't seen growth in 10, some of them 15 years. They haven't seen a market proper growth cycle in that long. To me, and it's pretty obvious when you kind of put it in that sense, there's markets that are going to, when they start their boom and it really starts to chug, that I believe they will keep going because they've had such a long, time in the doldrums of not moving. There's so much juice left in the tank for those, especially when it comes to affordability, as opposed to markets that are already at the top of their cycles.
Yep. So the secret then is finding those markets which haven't moved for many, many years who just need to get back to equilibrium.
Yeah, pretty much.
And if you want to transact or trade in that, it's really buy now and you can sell out at the top or you hold on to it if it's good yield.
Yeah, definitely.
All right, Sam, that was good, mate. I enjoyed catching up. It's always good to have a yarn.
Likewise,
good to hear things going well, mate.
Thanks, mate. Appreciate it. Good to be back
Don't
here.
Be a stranger.
Nah, mate, 100%.
I know it's a long way from Wollongong to come up here, but but the road network getting down there is pretty good down the south coast now as well.
It's not too bad,
Berry bypasses all sorted out.
Yeah, it's not too bad at all, man.
It's good. It's a nice one. But that's Sam Gordon's Director of Australian Property Scout. I hope you enjoyed that, everyone. You got any questions at all and anything we spoke about, you can contact the team, editor at smartpropertyinvestment.com.au. We'll get Sam in again for a bit of a yarn. Next time I'm going to make sure he's got something a little bit more for us, but saying jest. But remember, smartpropertyinvestment.com.au, lots of different stuff. And some of those locations we've spoken about on that Inland Rail network, we talk about them at smartpropertyinvestment.com. Remember, go and check out, there's a great data resource there, free to use. You can check out any suburb largely in Australia to work out what's going on. Social media, Smart Property HQ. And just a favour for me, please, if you like what we're doing with this, can you please keep those reviews or write us a review, whichever podcast player you're listening to this right now. The team here get a real kick out of it. It's just not me behind the mic. It's a real talented team of podcasters who make me sound good and make this show what it is. So if you can do that, that'd be great. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Bluestone makes investment loans simple with competitive interest rates. Borrow up to 85% of the value of your investment property without paying lender's mortgage insurance and no cap on existing investment portfolio size. Plus personal Bluestone support from application to settlement. So don't wait to unlock your future. Bluestone, award-winning home loan solutions. Find out more at bluestone.com.au/investors. Lending criteria, T's and C's and fees apply. Credit provided by Permanent Custodians Limited, Australian Credit Licence 390183.